Well, good morning. I'm Laura DeLacy. I'm the Executive Director of the Milken Institute's Asia Center. Welcome to the 10th episode of the webinar series, The World Post-COVID-19. Every week, the Asia Center of the Milken Institute is hosting short and to-the-point conversations on the issues that are shaping the conversations and addressing the transformations that will shape the world post-COVID-19. Today's episode will focus on the future of currency and global financial systems, and it will be moderated by John Lee, Senior Advisor of Capital Markets at Accenture. Before I pass it on to John, I would like to talk to you about what the Milken Institute is currently doing to address the COVID-19 crisis. Everything that Milken Institute does is either focused on finance or health. On the health front, we have our colleagues at Faster Cures in Washington, D.C. are tracking 227 treatments, and they're tracking the usage and efficiencies of these treatments. And we're also carefully following the development of 159 vaccines around the world. On the finance side, we're organizing sessions like the one we're having today, where we are reassessing and reimagining the future ahead. The Milken Institute is encouraging leaders to take advantage of this great reset and use their creativity and to adapt and create a new future so we can actually consider climate change issues, sustainabilities, social and governmental implications. You know, we can make sure that our companies and industries are part of rebuilding a world that support equality, inclusiveness, sustainability for the sake of our future, the future of our communities and the futures of our countries. Now, without further ado, I would like to pass on to John. John, thank you so much for moderating our 10th episode. We're really happy to have you and your esteemed panel with us. Thank you.
Laura, thanks so much for inviting me to speak on this exciting topic, and I'm honored to be in the presence of a tremendous amount of brain power. And given it's right and straight to the point, I'd like to just get to the very first question with regards to our current environment. When you think about the macro environment that we're in right now, we're truly in unprecedented times. And if you think about the current health pandemic that's just pretty much wreaking havoc across the global economy, we're really in uncharted waters, and we're really not sure what the new norm is going to be. So what I wanted to do is just actually ask Michael to kind of share what your view is on the stabilization efforts that's being done by the central banks and what the impacts are to the global investment community.
Great. Well, thanks, John, and thanks to the Milken Institute for giving us the opportunity to share some of our ideas. Absolutely, this is unprecedented in our lifetimes. A pandemic of this nature, an economic shock of this nature, paradigm shifts of these natures. So I think we think about it in a couple fashions in terms of stages. The first, global central banks really solved a liquidity crisis, which moves us to the next challenge, is solvency. And I think we have yet to realize the implications of the insolvencies that this is going to create, the dearth of demand. We have bankruptcy issues that are going to unfold across the global economy through the rest of the year. We have a labor market in terms of whether it's the savings rate, which in the US is now above 30%, which we have never seen before. We've exceeded levels in the 1970s. We have an unemployment rate that is massive and likely to be sticky on its way down, and it's synchronized. It's not just happening in one region, it's globally. So I think we need to sort of accept the reality that this is big and it's going to take a long time to come out. And then we move into the topic at hand, which is really about currencies, fiscal policy, monetary policy. Going into this crisis, the IMF, the World Bank, they were warning the world time and time again, deficits are too big. You've run up these huge deficits during a 10-year expansion. What happens when it ends? Well, it just ended. And we have huge deficits, and the only solution is to create more deficits. So that is a reality that we're going to have to face. Now, some countries are in much better shape. If you're in Scandinavia or you're Australia, you don't have big deficits, you can ramp them up. But if you're already approaching 80, 90, 100% debt to GDP, it's going to be a challenge, which then leads us to, I think, problematically, the next paradigm shift that we're in. 6 months ago, if you had gathered a group of us, sitting here today and said, what about the idea of just printing money to spend money? I think we all would have said, well, that's ludicrous. No one would do that. We've done it every time you've done it for 1,000 years. It's ended in disaster, from the Roman Empire to First World War I Germany to the Brazilians in the 80s. It doesn't work. There's no free lunch. And today we're talking about doing it again. So, and that's because the fiscal deficit's too big. It's maybe the least bad alternative. So money printing is becoming a real discussion. And that changes the landscape for investing, for inflation, for the value of digital currencies. All these issues, I think we need to be fully aware that we are now in a new paradigm. And that, I think, it's possible we navigate through it, but that is different. And then lastly, this is all happening in amongst a period where you're having geopolitical tectonic shifts to the global order. And certainly we have two huge superpowers of China and the US figuring out what is our new relationship vis-a-vis currencies, vis-a-vis a lot of issues, trades of goods, people, and they both haven't figured it out yet. And it's going to take some time. I'm optimistic at the end of the day they will, but I think that's a reality that complicates things. So certainly it's going to keep us all, busy.
Thanks, Michael. I think you raise a really, really interesting point on the proliferation of currency and kind of the things that are happening between the US and China. One of the things that is very, very hard to ignore is the emerging market trends around the development of these, what I'll call the alternative digital currency. And if you think about the likes of Bitcoin and the various plethora of stablecoins that have come out, Libra as an example, as well as fiat pegged stablecoins, and ultimately central bank digital currency as well. There's a big sense here and a big debate on whether this is a real thing, a fad, it's temporary, what are the benefits, what's going to move forward. Dr. Shen, I really wanted to, ask you what your views are on that, and if you can please share on China's plans with their CBDC efforts.
Thank you, John, and glad to be in the Milken Institute this event. And I think Michael actually raised a very interesting question as well in China, that there's discussion for the first time that scholars and even some government officials actually proposed to monetize fiscal deficit. That's really quite interesting. This debate can go that far that already, even in China, even though the fiscal deficit is still it's around 3.6%, right? So for this year's target, and the government debt is around 60% of GDP, but still, people already discussed, this it's a quite fierce debate. I found it very interesting because previous without this pandemic, and it's probably is a taboo question. No one can say that, but now it's become an open debate. So for Chinese central bank, we know they are very cautious. They banned the use of Bitcoin in China, right? So that's very clear. But instead, the Chinese central bank is introducing a digital currency, but they actually call it DCEP, a digital currency, electronic payment system. So actually, it's quite clear. The digital currency is a M0. So it's interchangeable with the paper money. So that's, but it's the distribution of this currency is very different. We're using this digital technology, right? So it's electronic version. But most importantly, the focus is on payment system. So we know in China the mobile payments, the system and also the usage is probably the leading the world, and most people are now using, either WeChat Pay or another one is by 支付宝, this two Alipay, WeChat Pay, and it has been dominant in China, the payment system. But for the Chinese bank, of course, they actually want to introduce something that can be used for everyone, and also as a competitor to this two payment system. So I think the focus in China digital currency is not on the currency itself, but on the payment system. So that's the Chinese currency system. And after the pandemic, I think one interesting way, the trend is to digitalize the economy. So everything will be digitalized. So the focus on 5G, right? All this data center. So and all the shops, all the factories is now trying to upgrade their system to be to enable this online business. So that's actually create huge need for this digital technology as well as the payment system. I think that is one area that China is already quite probably is leading the world in the usage, the technology, and also the wide implication on the economy. Maybe I first stop here. Thank you.
Thank you, Dr. Shen. I think the world is definitely keeping tabs on that. And when I think about the trends and just you know, other initiatives like the digital dollar in the U.S., when I think about what's happening in Sweden with the e-krona and with Riksbank, I think about the argument right now that comes to fruition every single time this comes up, is around the concept of digital fiat currency. There's always been a bit of a debate that already exists. So what makes this a little bit different? When you think about e-commerce and online related payments, you're actually not really exchanging the payment values over physical notes. And so one of the things that always comes up is, you know, what is this alternative form of payment and currency, and what are its values? And so Bill, I was hoping you could opine a bit on that.
Sure, and let me try to tie all that back to what Michael and Jung-Won just said. Michael sort of introduced this notion that things seem very unusual now because of the COVID. Standard rules of thumb no longer apply. Big deficits are no longer big. Lots of money printing is no longer lots of money printing. We're in sort of a space-time war caused by the COVID-19. And Jung-Won said, well, you know, digital currencies have been introduced in China, especially at this time, because China is so far ahead in digitalizing its economy, it only is natural to go to a digital central bank currency. So as someone who spent his entire life pretty much professionally at this Federal Reserve, the IMF, worrying about the stability of the global financial system, and then in my sort of more dark period as chief U.S. economist at Citibank, where I actually had to deal with real world clients, let me try to introduce this notion that there are problems with the current financial system that are not being solved, that payment systems are not doing what they have to do. And the introduction of these digital currencies is in some ways, I think, an attempt to meet these unspecified demands, but in an environment where rules that were kind of old hat rules no longer apply. And so in that context, let me say that these digital currencies, I think, are meant to satisfy the notion that, well, you know, cross-border payments are incredibly expensive. Remittances, right, alone, private, you know, retail remittances are cost an arm and a leg if you go through Western Union. They take a long time. And so when you think from an economist's perspective, what's the purpose of a payment system? It's to quickly get money from one place to another and make sure that once it gets there, it's final, that you actually have what you're supposed to have. So finality, right, and a medium of exchange is something that the payment system ensures. But what is it that you're paying with? And that's what the central bank produces. It's a currency. But now we have two issues. One is paying people within one currency area, China or the Euro area or the US and its dollar area. And also there's payment to people who cross these currency areas. There are 17 experiments going on by central banks in one form or another trying to develop digital currencies. And each of them is addressing a domestic payment system for now. Very few of them have really talked about cross-border payments. So the cross-border world, that wholesale payment world, still belongs to the world of the multinational banks, to SWIFT, right? The payment system that ties together all these commercial banks. And the way the payment systems are generally structured is there's a central bank, and then there are commercial banks, and then there's the rest of us who deal with the commercial banks. None of us have accounts with the central bank. The notion that China seems to be introducing is, well, because we want to get rid of cash, and because cash is very difficult to trace, and we're trying to digitalize our economy, we are allowing more retail exposure to the central bank. That is, the central bank is actually proposing, I think, in China and in many of the other 17 central banks, possibility of retail accounts with the central bank. That, to me, it solves a problem of finality. That is, if you're going to use a central bank digital currency to pay, you know it's good money because it's what economists call high-powered money. These are money issued by the central bank that becomes reserves in commercial banks. Electronic payments, they are supposed to be speedy and lower cost. So that solves that other issue of lowering the cost of payments. So in that sense, I think the development of central bank digital currency, right, is one way to solve a problem that is not being solved by the current payment system. And it's being forced to develop because Alipay, PayPal in the US has really challenged whether traditional forms of payment are still needed. I must say, though, that's often the case in a less developed economic banking system. Here in the United States, I take my credit card and I pay my Amazon bill, right, and I get my product. So in places where credit cards and other financial products are well established, the banks are well established, I think the need for a digital currency is less than the Filipino maid in Hong Kong needing to send money back to their relatives in Manila, right? In that instance, a central bank digital currency would do wonders. So so those two extremes, I think, bracket the kind of future developments that we should see in this digital world and present different sorts of policy problems, both on the wholesale level. What do you do in this two-layer structure, especially when you now allow direct access to the central bank and you're sort of breaking the two-tier structure? Is it safer? Is it more fragile? And that's something that the central banks should be discussing, and we should be discussing here.
Thanks, Bill. Michael, I wanted to ask you, there's one of the things that, that Bill had mentioned in terms of CBDC and how this could work and maybe not as, I'll call it G10 type economies. One of the things that came up with regards to the enablement of CBDC and what that could do in unlocking the value of things like tokenization and how digital assets, et cetera, could be basically settled almost immediately. These are some of the use cases that are being explored right now in terms of bringing liquidity to the markets. But when you think about that and the impact of the overall global economy, like what are the risks that you see specifically around fiscal and monetary policy?
So it's one of those things where I think it can start as a really good idea. I mean, it's probably inevitable, so we know that. But I take an example in Ecuador. I remember years ago, there were conversations around they wanted to create some form of their digital currency for a very good reason. You had people in Quito, in the main city, and they needed to get money to their relatives in a village, and they didn't have a bank. And so you created some sort of mobile currency that they could, send money to. Perfectly good. But then the questions are, can you get leverage on that money? Who controls the amount of that? And I think that was a concern, a lot of people raised in the introduction of a digital currency without a very clear central bank mandate with a lot of credibility. For a digital currency to work, the central bank has to have absolute credibility. People have to trust it. There have to be rules and systems in place. We can't start creating money on money unless we can manage the initial stock. And so I think that was a risk before COVID. Now the challenge is we're in a world, as Bill said, where, hey, money printing is fine, fiscal deficits are fine. So you introduce a new money into an environment where even sort of more normal centrist policymakers or academics or practitioners are saying it's okay to print money, that has a big risk to explode in the wrong direction. So no question, as a payment system, it needs to happen. It's no question that we were moving in the direction of the internationalization of the yuan. The yuan was going to be one of the big international currencies. That's probably necessary and inevitable. But that in this world, we need to kind of think how that plays out. And I think there are risks of debasing currencies if we do this wrong, where one day, you're printing so much digital currency, people are like, I don't even know what this means, and it doesn't mean anything. And it relates to a really simple thing. You have to trust that piece of paper you own or that digital token that you own.
So, Dr. Shen, given where China is on that, where do you see the risks that the introduction of the CBDC. Can you give some insight into kind of what the Chinese central bank is thinking as they're actually deploying this? Have they taken some of these risks into consideration?
Yeah, I think the issue is the digital currency. It's controlled by the central bank. Before we know the Bitcoin is decentralized, right? So it's not controlled by anybody. It's it's a blockchain technology, decentralized. But the Chinese central bank is very much centralized. It's just like M0, right? So this is something I may slight disagreement with Michael is whether it's a digital currency or it's a paper currency, it's the same thing, right? If the government wants to print money, either in a digital form or in a paper form, that still can cause a lot of problem, if without a proper control. So this is related more to do with the new monetary policy, NMT, right? So it's mean that you can print money with, as long as there's no inflation, you can print the money, and then so without the inflation, people still, there's no question about debase the currency. But as long as the inflation rises, that's the problem. But now we are facing actually a deflationary pressure everywhere in China as well. The inflation is declining and the PPI is negative, right? So that this is is not an issue with whether it's a digital currency or a paper currency. But for China, actually, the challenge is, so far the payment system, it's dominated, mobile payment system dominated by Alipay and WeChat Pay, right? And actually, these are two private company, and they have their own business interest, right? So they probably control, I think, 90% of Chinese mobile payment system now, not by the banks, not. And so for the central bank, so you try to make sure that the payment system is stable. There is alternatives, and they can introduce more player into the market. So otherwise it'll become a dual monopoly. So duopoly. So that actually is something the government, the central bank in China does not wish to see. So they introduce a new platform. This digital currency, it might be very, very interesting, very good in a way. It introduced more alternatives and the competition. So actually, it's quite open. It's also introduced, the Alipay company and the WeChat Pay company. They are also part of that, and also a major central bank to experiment. So I think in Chinese case, it's actually is to reshape the payment system, make it probably more inclusive and more, equal.
Can I jump in here, John?
Yep, absolutely, Bill.
John Kwon is spot on in exactly in what he said, and let me try to amplify where the dangers are that I think Michael was trying to point to. When you have a central bank, it's exactly the central bank controlling money supply. As I said earlier, the digital currency is just replacing paper currency, so you can control the money supply. The key is that second layer, right? The Alipays, the WePays, and if they are able to control the leverage and leverage their balance sheet and sort of to make their money supply more elastic, that's not subject to the control of the central bank. That's where you find the danger. And history is fraught with what economists call the unfettered expansion of inside money money that's produced by the banking system itself. Almost every financial crisis and bank run has been tied to the banks expanding their balance sheets without constraint and without governance principles. So I believe in China, one of the attempts to control the degree of leverage in these alternate payment systems is to require that there are reserves and deposits at the central bank, and their expansion is governed by certain rules, that they can only have X% of leverage, and that X% is governed, I believe, by the central bank. Is that right, Dr. Shen?
Yeah, that's right. That's right. Before there's no such system, and now they to put some money into the deposit money into the central bank. Yes, that's right. So there's more.
Whereas something like a Libra, which is outside the control of any one central bank, or Ripple, or what have you, all these alternative payment systems that are supranational, that to me is the biggest problem facing the policymakers. How on earth do you prevent these companies, if Mark Zuckerberg decides to double the money supply, right, he can double the money supply of Libra instantaneously by just changing the exchange rate vis-a-vis all the other basket currencies. So I think that's the danger, that these digital payment systems can be in an unregulated world. And that's why I think this BIS and other IMF and all of my friends who are regulators are really up at arms, because their fear is that history will repeat itself, that the unfettered rise in bank-produced money will cause such over-leveraging that there'll be runs on a bank and bank collapse. And that's the danger of and introduce the fragility of that financial system.
Thanks so much, Bill. We've got exactly 4 minutes, and I just wanted to get this last question out to all three of you. In terms of your concluding statements, one of the questions that I wanted to ask was kind of your prediction on when will there be mass adoption, if at all, on these alternative currency platforms. I think it's clear that a central bank-based digital currency is sort of where we do see that value going. But when do you think that is? And Bill, you made a really good point in terms of policy and the regulatory body. We have to make sure that this is done in a regulated manner. So with that, when do you think this is actually going to gain mass adoption? And I'll start with you, Bill.
Thanks. Let me say that the inevitability is already here, especially in a place like China, where hardly anybody uses cash anymore. But in a place like the United States, where, as I said, the financial system is so well developed, it's going to take a lot of convincing to take my credit card out of my wallet and replace it with swiping my smartphone to pay for my Starbucks. I think so. So the adoption of these currencies really depends upon the sophistication and strength of the domestic financial system. I think the place you'll see adoption fastest and most extensively is in the emerging markets, where the banking system is fragile, no one trusts the central bank, and they need an alternative payment system where you get finality, sure thing, and you have confidence that the currency will retain its value.
Thanks, Bill. How about you, Michael?
Well, maybe COVID accelerated it, because if you go to a store here in the U.S., no one will take paper currency because they think it's dirty. So maybe this pushes it forward. I think it's really critical. I think we're already past that point. It's going to happen. I think it needs to be done by a central bank for all the reasons Bill mentioned, that you can't start to create it outside of the central banking system by the private sector, because it's unregulated and it can't be controlled. It can be dangerous. And it needs to be done in a time and a fashion that the central bank has credibility. So that is my only concern, is that if we're starting to question central bank credibility by printing money before we have a digital currency, you've got two unknowns put on top of each other. And so I worry there's risks. It probably happens, and it probably eventually we all get it right. And as long as BIS and Central Bank of China and the Fed are communicating and talking about it, I think we will get it right. And it does have great potential, but it also has that huge risk that we're putting two unknowns on top of each other in an uncertain time. And that, I think, is my concern.
Shan.
Yeah, I just have 2 points. Actually, 2 points. So first, Bill, and in China, it's not using mobile phone anymore. They are experimenting a payment by just face recognition. So you don't even need to, bring your mobile phone, face recognition payment system. And also the second issue is, actually, I found it's quite good. Countries are competing, right? Different systems in China. It's all controlled by the central bank. Different countries are exploring different ways. In China, it's very much central bank driven, right? It's a central bank currency, digital currency, and it's banned Bitcoin and other currencies. And in the US, the Fed said, we don't introduce, Fed digital currency, right? It's actually driven by the private sector, like Facebook, Libra, right? So it's a very different way of experimenting already. And other countries, maybe they use Bitcoin and to allow this Bitcoin to dominate the digital payment system. So I found it's very interesting trend is that different countries are adopting different method and strategy towards these issues, and then we can see what are the best what is the best solutions, and we can have a different system to see the evolvement of this the digital currency development.
Well, thank you so much, and I think we're on the hour. Dr. Shen, Michael, and Bill, thank you so much for your insights and your time today, and thanks to everyone that listened in. And with that, I guess it's time to hand it back to Laura or sign off.
Very much.
Thank you all.
Thank you all. Bye bye.
Bye-bye.
Bye.